Will this pump hold up to President Trump's strategies around tariffs and much more? The markets are not responding like you might think. My name is Paul Barron. Welcome back into the Tech Path. Let's get going. I do want to thank our sponsor, and that is iTrust Capital. This is a place where you guys can start your crypto IRA, and it's very simple to set up. Another thing you can do with iTrust Capital is if you have an IRA outside of iTrust, you can actually move it in and start doing crypto trades within it. So it's a very cool function. You can join up to 200,000 other people who've actually started their own IRAs and getting into crypto. Did you know you can do this for your kids? You can do this for your family members. Check this with your tax advisor. It's one of the best options out there to use. You can get a $100 funding reward just by using our link down below. Let's get started. All right, I want to hit on a couple of big points, and that is the trade war back on? Of course, this is coming after a brief pause, after a market hits, Bitcoin hitting an all-time high. Trump just threatened 50% tariffs on the EU beginning June 1st, 25% tariffs on Apple. And I'll get into that in a second. But in 5 days, the S&P 500 erased $1.5 trillion. And of course, we'll see how the bond market reacts. You look at that in comparison to U.S. recession numbers, and we've started to clip up a little bit because we were down around 37%. And if you consider that comparison to all the way back here in February, where it was pretty much non-existent, to the spike that we saw back here in early April, and then again right here on May 1st when those tariffs went into action. But I think what's happening is the market is starting to realize that Trump is negotiating, and this is just his model of negotiating. That's why I don't think we have seen much movement on the crypto market. Now, will we have movement? Yes, there's always going to be volatility, and that only creates opportunity because you can understand if we continue to see the cycle going forward. And I just had Sergey Nazarov on, and we had a chance to kind of talk about this, is that the snowball effect, as long as we don't get a macro event globally, the snowball effect is almost unstoppable. Let's go to French Hill. He's going to give us kind of a rundown of where he thinks these EU tariffs could play into it. Take a look.
I think all the big picture issues that Trump has raised about moving more production back to the country are good, and we should try to do that where we have a comparative advantage, but it takes time. In the meantime, something like the EU discussion is about, come on, let's have a discussion. We've tried to have a trade progress under 2 or 3 presidencies with the EU, and we've not made much progress.
Speak to this, though, if you could, which is, and we were talking with David Rubenstein about this, the president has been very public about his want for folks like the EU to treat companies like Apple and Facebook and American companies properly, right?
Right.
And he has been very vociferous in the idea that when they go after our companies, that's a problem. And so how do you sort of square the idea that he goes after our companies, if you will, in this kind of regard? And then what you have is the EU says, well, if he's doing it, you know, what are you even talking about?
Well, look, my best advice to the president is stick with the macros. Regardless of all the noise we've had, all the uncertainty around that this spring, the number one place for foreign direct investment is the U.S.
All right, I don't know that that was necessarily a fair question because I think French Hill was political in answering that, but I think the point is the different kind, because what Trump is looking at when he goes after our companies, it's just to get them to build in the United States. That's a fairly harmless. Now I get it, yes, Paul, there's always the potential of building outside the countries to be able to do better in terms of trade and get cheaper labor, et cetera. But when you look at supporting the United States, I think his approach is right. Now, when you get the EU, it's not necessarily the same scenario. These are much more overbearing laws on companies that are trying to operate in those countries without really regulation that we do the same thing with companies in Europe that are trying to operate here. So that, I think, is what they're getting at, is they want more of a fair trade situation. And of course, right now, Apple fell slightly, 4%. This was on the statement that he said, hey, listen, you need to bring your U.S. manufacturing back here to the United States. And they most likely will do that. I think Tim Cook has even gone on record saying that by 2030, we'll have a lot more of our manufacturing here in the U.S. That is a seismic shift for Apple in general. And I think it makes a huge difference to the next level. Here is how Apple and Trump could meet in the middle. Take a look.
Well, it's hard to believe that that this comes to pass. I mean, this tariff asking them to do something that is pretty well nigh impossible to do, to make iPhones at scale in this country, is not going to happen. in an investable time frame, and certainly not while Trump is president.
What do you see as the off-ramp on both sides?
I think if they can, put a facility somewhere that makes, a few thousand iPhones and put some R&D into robotics so that you can spin a story that at some point in the future, maybe we can make iPhones. That's not going to happen while Trump is president, but they can put something in the ground that, creates a future path that they can talk to. That would be the off-ramp in my view.
Again, this goes back to the whole concept of how Trump negotiates. He always throws out these random, big, huge, bombastic statements, knowing that he's going to backtrack on. And I agree with that analyst right there, is that I think there will be a middle ground, and it will be an easy win. Robotics manufacturing, that we're going to do parts of it here in the U.S., those kind of things more advanced that maybe Apple could do to help appease President Trump. And that, I think, is really all he's looking for. He's looking for the optics of how this looks going forward. Now, the good thing is that right now the U.S. and India are very close to a trade deal. And if this gets announced and it's done, this will start to put a little bit more pressure on the EU and definitely into other Baltic states as well as Middle Eastern areas that I think will start to see some good positive movement. And again, the point being is that we are still in a position right now that I think now the globe as well as markets are starting to understand this is how Trump negotiates. So that is why I don't think we saw an immediate reaction just to the EU situation. I do think that even a big deal with the EU will give us a little bit of a rise in the market, but it may not be as big as everybody thinks. What you can expect is going to be a rise in the market around what Kraken is doing, and they've just now set up to tokenize stocks. This is a big deal because this is going to open up stocks to the world. And think about this too, because now you could leverage U.S. stocks around the world, China, Russia, the Middle East, South America, all of those types of people, just like stablecoins who want to get access to the U.S. dollar, could get access to U.S. companies through something like this. So that is a big deal. And if this goes into a DeFi model going forward, that could get to become a pretty big deal. Kraken previously announced this rollout on its exchange. There's 11,000 U.S. Listed stocks and ETFs as of April this year. 50 of the popular stocks are going to be available outside the U.S., including Europe and Asia. And then Kraken, of course, and I think this is going to be global before long. Kraken also is in direct competition with platforms like Robinhood's. That is the one I'm more concerned. I think Robinhood will most likely do a very similar model. I can't imagine that Vlad will not go this direction because it is kind of the future of where securities are going, without a doubt. Other things you have to look at is what's happening on the idea of futures. This is, of course, perpetuals. And this, to me, is good news for the industry because we're starting to see this coming in from, of course, the CFTC commissioner. She basically confirmed it. Cryptocurrency perpetual futures are allowed for trading in the U.S. Another bullish signal. Now, this is the bigger part of this episode, and it really is looking at how stablecoins might move forward. We are going to get a Genius Act in the next few days. And its timing is kind of interesting because now you have JP Morgan, Bank of America, Wells Fargo, Citi, as you can see there, saying, let's band together and create a coin, a token, to compete against Tether. Now, if you consider this and some of the points that are made in this tweet, and I agree with some of them and some of them I do not, and I'll explain, but what you're witnessing is not necessarily innovation, it's institutional survival. I agree with that. I think banks are at a very unique position right now because they see the writing on the wall. The amount of liquidity going into stablecoins will drain regional banks. That I agree with. I think we will see a large amount of banks that will get hit on this, and unless they've got something in play, it could change the landscape of American finance. They're also at war right now with the decentralized dollar. This is where I do not think the banks can win unless they can alter their model. Now, and there's two reasons why. The first reason is that the demographic that is starting to move into a decentralized finance model is a different demographic than they've dealt with for the last 30 years. They've been dealing with boomers and Gen X, which is pretty much where all the money is. That money is now transitioning not only through markets, but also through just passing down within families. We're going to see a different kind of investor and also, I think, a different kind of person out there in terms of where things like stablecoins are going to be held. This is a joint venture. It's basically like cartel defense. If you think about, cartel families teaming up together just to defend against the new, more powerful family coming in. This isn't a stablecoin project. It's a dollar cartel reformation. And I do agree that could create some very interesting things. Now, there will be some, and I agree there will be some shelter. This is the concern I have, is that the banks, because of their positioning, both in the lobby side of it in DC and also through the Fed, is that they could start to put a little bit of pressure on what we will know as stablecoins, which is why I think Ripple is the better choice for acquiring Circle. Because if Ripple were to acquire Circle, cross-border payments, they will strengthen Circle, and it will strengthen the ability for a free stablecoin going forward. Timing's a big giveaway. Tether, of course, flipped U.S. bank deposits in velocity and adjusted volume. That got their attention. And of course, if they haven't been paying attention till now, most of these guys need to be fired anyway. Bitcoin is decoupling from its traditional risk asset and is now moving into, I think, will be a new monetary stack. I talked about this earlier in the week. Many of my money management friends are already starting to amp up their crypto holding percentage to as much as 10% of portfolios of traditional investors. That is unheard of. 1 year ago, they were struggling with 1%. In 1 year, that has moved to real money managers asking the question, I think I'm going to go with 10% recommendations on holdings of things like Bitcoin, ETH, and some of the other altcoins out there. So this is a big deal, and this is the beginning of it. Now, what you have to really concern yourself with is this right here. KYC by default for wallet usage. That'll be a question mark going forward. You can expect that from the banks. The other thing is you'll probably see some geofencing. Yeah, I would agree with that. Transaction censorship hooks most likely will be written into it. And then we'll have yield incentives to bait adoption. And this is going to track your flow. Guys, I think the banks think you're going to fall for it. I do. I think they think you are going to fall for it. I don't think you will. And I think that people who are in crypto today, and the ones who are coming in, are starting to wake up to a new frontier of financial freedom. And I think it's going to go without the banks. Now, some banks, like I said, could change and could create something that is a little bit more allure. I think the neobanks will be the ones that do it, not necessarily traditional. But this is survival now for sure. And here's the reason it's for survival. Tether announced they brought in, that's $1 billion of profit in Q1 of 2025. Let's just look at this for a second. They made more profit than BlackRock with 1/150th of the staff size. Step back and just think about that for a second, guys. This is the next revolution in innovation. It's something I talk about, that we're going to see individual creators, designers, engineers, individuals become trillion-dollar companies in the next decade. That's right. You're going to see a company that is going to have a 5-man team at $1 trillion. So that's the kind of thing that's happening within crypto going forward. I want to go to this last clip here because this is where stablecoin demand and also standards are going to get a little bit sketchy coming out of DC. But here's French Hill talking about this. Take a look.
To create a dollar-backed stablecoin is an important strategic asset.
Trump World Global?
Well, they would have to comply with the new federal law.
Right.
And no one right now complies with the work that we've done in the House or Senate on a stablecoin act. Circle doesn't fully comply. Tether's not even in the United States. It's outside the U.S. It wouldn't comply. So if we have a high standard, the world will come to that high standard for enforcement and for definition. And, you know, if the Trump coin can meet that definition, so be it. There'll be multiple competing stable coins, in my view. You see the headlines today that the large banks are thinking about collectively having a stable coin. It's a new payment rail in Web3 on a blockchain to compete with other payment methodologies. I don't view it as a store of value. I view it as debit cash, credit stablecoin, buy something institutionally or as a consumer.
Do you see it as hopefully disinflationary, meaning that it should take cost out of the system?
Oh my gosh, yeah. Well, blockchain generally, what attracts me to crypto is not crypto, not Bitcoin, but the operating system benefits of blockchain. I think it takes costs out of the system. I think for consumers, it creates accessibility. Look at the Benji, which is Franklin Templeton's money market account. that's been tokenized, they can offer that at a higher rate and a lower dollar amount to customers because the cost has been taken out of the system.
All right, so French Hill has been well coached on crypto. But I will say this, guys, and I want you to be cautious right now because we are approaching an era in which it feels like crypto is becoming mainstream, government is in on it, everybody's for it. But don't for 1 second believe that the US government is in a position where they are going to look at crypto the way that you and I look at crypto, and that is a true decentralized future, because control will always be the key component. And notice that he said something there that's very important, and that is that no crypto stablecoin issuers are in compliance right now, which means they're putting those rules into place. The one rule I hope is into place, and though the way we read the Genius Act, it is, which is going to be interesting for banks, is that fractional reserve banking won't exist in digital currencies such as stablecoins. Where it will fall apart is here. KYC, it's that simple. If you start to see KYC implementation in anything that you're using within crypto, you can understand that that is the beginning of the end. That's the problem and the concern that I have, which is why I believe Tether will still be a huge part of this ecosystem globally going forward. Now, if you look at Bitcoin's bull market and how it's redefining Bitcoin's role in modern portfolios, this gets back to my point earlier, which is that we are going to see a lot more moving into this area. And I think it's just a matter because the idea is once that people start to really understand digital assets and they see the difference in performance because it's a global market, it may change the thought process of how investing is done. And if it does, I'm not sure that even our traditional investing houses today, whether you're a Fidelity investor, you're someone at buying ETFs at IBIT with BlackRock, or you're going out there on the open market and you're figuring it out for yourself and getting the best yields. That, I think, is the market that has yet to be discovered by mainstream. And when it is, that'll be the real question going forward. Just to give you an example of this is a taste of mainstream, but the taste is coming from institutional. And this is a good example. IBIT, #1 all ETF inflow yesterday. As a first, I believe the mighty VU took a rare day off, and also the byproduct of these all-time high induced feeding frenzies that Balchunas is talking about is that this is traditional finance just playing catch up. All right? Traditional finance just playing catch up. Get ready for when we see a new mindset going forward. I call it the crypto mindset, and it changes the game dramatically. Everybody else is running for the doors right now, and they're hoping that DC has got a safety net to catch them. We'll get more on this for you guys. If you're not in the Diamond Circle, get in right now. It's a great place to get additional content, and you can also reach out to me directly over on my Telegram group. I usually leave a link down below, so use that. Only one. It's the only link that we have directly to me. And of course, if you're not following me on X, do that. It's @Paul Barron. We'll catch you next time right here on TechPath.